Hey everybody, this is Ryan Mallon. We're going to talk about the whole stock market stimulus checks issue that we saw unravel in the stock markets late Monday afternoon that sent the stock market down 75 points in 15 minutes on the S&P 500. It was crazy. Nobody was expecting it. It came from a Donald Trump tweet that essentially said, we're going to call off negotiations until after the election. The algos reacted in an insane way. They just sold off in a market that was actually trading on very, very light volume up until that point that day. There wasn't enough buying power to absorb all of that selling pressure that was being driven primarily by the algos. So what you got now is the same thing that I've really been saying for like a few months now here on my channel, is that I don't expect us to ever see a stimulus check or a relief bill between now and the election. Why would you do that? President Trump needs the stock market to go up to give him the best chance at winning re-election. The Democrats probably want it to go down because that's what's going to hurt Donald Trump the most. They're not going to come out and say that. And I'm not trying to get political here. I'm just talking about from a political advantage. If you're a Democrat, this is probably what you want to see. If you're a Republican, this is probably what you want to see. I'm not a member of either party, so I'm not taking sides here. But look, that sell-off sucked, man. I was in the bathroom at the time. Okay, I took one of the few breaks that I take during a trading session. What a break to take. Good thing I had all my stop losses in. I go to the bathroom and I come back and I was like, what happened? Who said something? I had my suspicions because we saw a similar reaction in the stock market back on early Friday morning when President Trump announced through a tweet that he had the COVID-19 virus. So it seemed likely that something happened again via a tweet that was sending the market lower. Lo and behold, calling off the talks about the second stimulus checks. But before digging any further into this, it goes without saying that having stop losses in place are effective because you never know when you're going to get some crazy event like what we saw on Monday that unravels the market in an instantaneous manner, and maybe you're not in front of the computer when it happened. I got stopped out of one stock. Yeah, it pisses me off. It was Tesla. I had a lot of optimism on this triangle breakout pattern. It looked like it might have been coming around until that tweet came out and I got stopped out. Move on to the next trade. That's all you can do. All my other trades, they're still intact and they're doing fine. But the next day we got a significant bounce out of the stock market. That was huge. The reason why is it showed that really this event was just driven by the algos because all the losses were pretty much made up the following day, and it showed that really this whole event was already priced into the market. The market kind of suspected that there wasn't going to be a stimulus deal before the election. I have been saying it, and I'm not the smartest person in the room, okay? So it makes sense that there'd be other people that would be thinking the same thing. It was just basically pure logic. And one of the most heated campaigns ever, no side's gonna give the other person an extra edge. No way. But here's what you gotta remember about President Trump. He has a history of walking away and coming right back. So it makes sense for him to walk away here and not really mean it because he did that with China, with the trade war. He did it multiple times and he came back and eventually there was like a phase one or something like that agreed to. And then there was the talks with North Korea where he's also walked away and he came back. Now, I'm not here to talk about whether or not he made good policy decisions or bad policy decisions. I'm just trying to state the facts here. He's walked away from deals, he's come back to deals, and he's struck a deal. There's a good chance you see that. Again, I don't think it's going to happen before the election. If it does happen, I think it's going to be something where the Republicans, because they're wanting 1.6 trillion and the Democrats are wanting 2.4 trillion, if they were to strike a deal, they would be doing it out of pure fear of losing the election because of it. And so they want to strike up a deal. It'll probably be somewhere in the neighborhood of about $2 trillion. Each side will take victory. They'll tell their base how this was the best possible deal that they could have hoped for. We should be proud of it. They'll all have the same talking point. But if that's to happen, guess what? That's actually a really good deal for traders because I don't think the news can get any worse than what we just got on Monday, and it absorbed it in one day. Actually, it absorbed it in pretty much like an hour and 11 minutes. Hour and 11 minutes, it absorbed the whole thing because the next day when the market opened, it took off rallying and it went up over 58 points. So the S&P 500 dropped 75 points from highs to lows, and then the following day, it just kept marching higher to the tune of about 58 points. Very good sign for the stock market, good sign that it had already priced in the news that we had gotten when the algos freakishly sold off to the Trump tweet. So if we're looking at this from a risk reward standpoint, really the worst is already out there because nobody's going to say it's not going to ever happen because we got an election and who knows how that's going to turn out. So nobody can say it's not going to happen in 2021. All they can really say right now is it's not going to happen before the election. And that's really the worst case scenario. The best case scenario is anything improving upon that. If they come out tomorrow or the next day or next week and say, hey, the negotiators are getting back together on both sides, the stock market's probably going to rally. It's going to be like one of these phase one deals are progressing greatly in the trade war. It's going to be this little cycle of news. Negotiators are optimistic, the market goes up. Negotiators are having a little bit of difficulty finding a middle down. The market maybe pulls back a little bit, and then they just keep recycling the headlines, and eventually the market goes up. Now, let's say they actually do come up with a deal, which I don't expect them to, but let's say that they do, then the market's just going to take off. We'll have new all-time highs before the election. Remember, in his book, The Art of the Deal, he talks about walking away from negotiations. He's trying to put the pressure on the Democrats to strike a deal with him the way that he wants it to be struck. And if he can do it, then that's only going to help him come election day. The stock market will be back at all-time highs. And again, I have to say this because some of you guys will lose your mind because you're just like, oh my gosh, he's talking about Trump. You cannot say anything good about Trump. You cannot say anything bad about Trump. That's not what I'm here for. I'm just trying to talk to you about how the stimulus checks, the stimulus bill works in regards with the stock market, what you can expect going forward. Again, I'm not Republican or Democrat, so don't fry me over the coals. There's also other risks out there still that involves the president's health in relation to the COVID virus. It looks like he's going to do okay with it. However, you never know what kind of freakish headline or tweet that you could get that's going to cause the stock market to go lower in that regard. That's an ongoing issue. But when it comes to the stimulus checks, yeah, I think from what I can tell, I'm not sure what kind of fresh news that they could come out with that would drive the market lower in relation to the stimulus bill. And so I see a lot of potential upside if the negotiators come back to the table or if they actually agree on a bill. I think there's just a lot of upside there. Now, if I'm wrong, then that's what you manage the risk for. That's why I managed the risk on my Tesla trade that got stopped out when he came out with a tweet that stunk. That's part of trading. You move on to the next trade, but in the process, you always manage the risk. I also encourage you to check out my YouTube membership down below. You can click join and it gives you all sorts of options to get more and more research beyond these 2 videos that I do each week. You can get everything from multiple updates each week on the stock market. That includes the S&P 500, the Russell 2000, and the NASDAQ. You also get updates on all the FANG stocks, Facebook, Amazon, Apple, Netflix, Google, Microsoft, and Tesla. Or if you'd like, you can also get all of my personal watch lists. That's my bullish and my bearish watch list, as well as all the intriguing charts that I come across each and every day. So make sure to click join below and make sure that you're subscribed to this channel here. That is a huge help in me growing the channel. It means a lot. Also, pound that like button. That means the world to me. Let me know down below without being a homer for each side of the aisle. Just give me your opinion without having to make it too political. I love you guys. Thank you and God bless.